Hi guys, today we will talk with you about Fibonacci level or Fib level or Fibonacci retracement level. It's one of the most useful tools which traders are using in the regular trading. It was first mentioned by the Ralph Elliott in their book about Ralph Elliott waves, and actually after that book waves, trend lines or trend waves was named for his owner, Elliott waves. And what is most important is that the Fibonacci levels or Fibonacci retracement levels, they have two very important features. What does mean? Let's say that is our trend. It was started from here. And what is very important is to first to draw the Fibonacci levels, and you have to first start from the first candlestick shadow until the from shadow to shadow, let's say. So as you say, let's say it's move a little. So here is our Fibonacci level. As you see, they have the Fibonacci levels has 1, 2, 3, 4, and actually it could be also 71%, but it happens very rare. Mostly turning points are here, turning zones, I mean, they are here. So what we have to say, if it already touched first time 23, then it was not. You see that it looks like a consolidation, but anyway, we will not enter here. We will wait, and then it goes down. And actually, I guess it was after weekend, because such a great gap, and especially in H4, happens after weekend. And you see, it goes down, and then here is the turning point. And actually, we see that here is the candlestick with a very, very long shadow or wick, and then it turns. If we will draw the trend line here, you can see that trend line was broken, so it goes up. So how we can use it? First we can by the trend line, by the Fibonacci levels, we can estimate or we can predict potential turning points. That's the first one. So when you want to draw it, you have to draw it from the shadow to shadow. And the second, what is also very important, you have to use it. You have to use Fibonacci levels in the complex with the different other tools like candlesticks. You see what we didn't. Let's say if I would enter, I would not enter only because it was in the 61.8, but I will also wait for the breaking for the trend line break to break the trend line. Then I will get another sign like a candlestick. You see that in the candlestick with a very, very long wick, and especially the H4, it's very good sign that the chart or the trend is always turning and the trend is changing. So if we have already 61.8 level in the Fibonacci, we have the break through from the trend line. And the third, we have a candlestick with a very long wick. And in the complex, actually, it means that we are in the potential turning point for the trend. Potential turning point for the trend. So as you see, we are using in the complex, not in the one case. But in the complex, Fibonacci level is very, very good and very strong tool. That's the first when we use for the as the tool for the correction. Next, what we can do. Next, we also can predict by the Fibonacci levels the potential is for the goal. Let's say what could happen? Let's say when we have already the first wave according to Elliott wave, or let's say the first wave of the current trend or the newly formed trend. The second, its obvious goal is somewhere 0.6 point, so 0.61. So as you see, it's somewhere here, and actually we can take somewhere. Our first goal could be here, because it's very near to the trend, very near to the turning point from the previous trend, and it's also very near to our goal according to Fibonacci levels. That's the first. We can take the profit here, or we can wait, because if trend is stable, it means that it will continue. You can take it if it's enough for you, or you can wait for the next. Where is our next goal? Next goal is 1. I mean the 100% of the previous trend. This one. They have this goal, or this trend is about the same. Long, or the same size like a previous trend was. But it also could be not our goal. We can also, if we want to take a more, we can already take it somewhere here. Looks 161 somewhere here. So our next goal. So actually, you cannot use Fibonacci level only by one trend, or you cannot use Fibonacci levels only by Fibonacci levels itself. You can use it in the mixing with the, let's say, trend line. You can use it also by the Elliott wave, because if you will know Elliott wave, we have in our YouTube channel also a video about about Elliott waves. If you would use Elliott waves, or you know Elliott waves, you should know that Elliott waves also, every time they have 5 waves. 1, 2, 3. It means that we have to have the next one. It could not stop here. It should go up, but it could also be flat. So it means that should come the deep. It should come again back, and then it could go to the uptrend, or the chart should be like the 1, 2, 3, 4, 5. So what I mean that Fibonacci level or Fibonacci retracement levels are very strong tool, but we have to use it in the mixing with the Elliott wave, trend lines, or different, because it's actually about the trend. Trend is your friend, as the trader says. So it's very important to realize that you are in the trend now. So, and if you are in the trend, you have to realize in which stage of the trend you are, and then use the Fibonacci level to realize, to accept your, to set your goal, to set your stop loss, and so on. Okay, so it's very important to use it in the mixing with the different tools. If you want to learn more about trend lines, you want to learn about candlesticks, and you want to learn more about Elliott wave, just subscribe to our channel and learn more about all other Forex market tools and indicators. Good luck.